Good morning, everybody. It's the 3rd of October. I'm Joe Neighbour from Signal Centre, all by myself today. Steve on holiday, so is Jamie, and Taff is on the school run. So, going to do my best to run through all the latest headlines and the latest on the charts as well for you all today. I hope everybody had a great weekend. Looking like we're in for another choppy week on the markets, and we'll get to that right now with the latest headlines. So let's just kick off with that. Eurozone inflation hits a fresh record high last week. We saw 10% for September from a previous number of 9.1%. This was also above the consensus forecast of 9.7%. The underlying rate also increased to a record high of 4.8% from 4.3%, and again above expectations of 4.7%. In terms of what's going on with the US, we saw a higher inflation reading there. The US core PCE prices increased by 0.6% for August after a 0.1% increase the previous month, with the year-on-year rate increasing to 4.9% from 4.7%. And above expectations being unchanged at 4.7%. The hawkish Fed rhetoric has continued. The Fed Governor Brainard stated that we are committed to avoiding pulling back on rate hikes prematurely, and policy will need to be restrictive for some time to have confidence that inflation is moving back towards 2%. She added that the uncertainty is currently high, and there is a range of estimates surrounding the Fed funds peak. In terms of the Swiss National Bank, the franc is not highly valued. In comments that we saw on Saturday, the chair, Jordan, stated that the franc is not highly valued despite the nominal rise, although he stated that he did not want to give any significant guidance. The UK under a bit of pressure still. The UK credit rating warning was given by the S&P after they cut the AA UK credit outlook to negative from stable, which reinforced negative sentiment. At Monday's European Open, reports indicated that it would be a U-turn on the planned cut of the higher rate of tax. So quite a big U-turn by the UK government. Sterling initially dropped on Monday following the ratings warning, but then surged following reports that Chancellor Kwarteng would announce a U-turn on taxation and abandon plans to cut the top rate of income tax. This was officially confirmed ahead of the European Open. We've got the RBA rate decision due tomorrow. That's at 4:30 a.m. UK time. So prior to market open tomorrow, we will have a look at what they are going to do. We are expecting a rate hike of 50 basis points, taking the overall rate to 2.85%, but it will be the forward guidance that will inevitably be the key element for the Australian dollar. Now, we've also seen some rumours over the weekend about some worrying signs from investment banks across the world. Credit Suisse and Deutsche Bank have been rumoured to be possibly on the brink of a collapse, being really up against it from a liquidity perspective. Some quoting that the situation is akin to that of what we saw with Lehman Brothers back in 2008 and 2009. And talking about the size and the implication of these two banks being in the situation that they are. One report I read was that the combined impact of the two of them was at least 4.5 times larger than that of Lehman Brothers, which eventually crashed the economy. So some pretty scary stuff out there at the moment. It's only speculation at this point, but it does seem to be a bit self-fulfilling at the minute, and a lot of people are jumping on that on Twitter. So if you are on Twitter and following some solid people on there, then I advise you to check it out and see what's being said there, and look at some of the charts that are going along with it, especially from the CDS perspective. The CDSs are effectively buying insurance against the default of these companies, and the spreads are up at close to record highs. So pretty scary stuff. So we'll look at the markets this morning. It's going to be a bit of a whistle stop tour because obviously I'm doing it by myself. I'm going to start off with the dollar index today. So we've seen this obviously rally pretty substantially over a number of months. We've seen a pretty chunky pullback in recent sessions. Big red candles, as you can see here. We stabilized on Friday just in front of this support level that we've got at 111.31. and we are around flat today. So nice pullback into support. We'll have to wait and see whether or not there's any buying support that's going to be seen as a result of this pullback. Obviously, overall, the trend remains very strong. So with that in mind, we would expect to see the dollar bulls jump back in at some point. If we start breaking down through some of these support levels, then we may see lower prices. But for now, all looks pretty good on that front. Taking a look at Euro US dollar, that continues to trade within this bearish channel, as we can see here on the daily chart. I've highlighted a level at 99.55 on the daily chart, which pretty much coincides with the upper end of this channel, which is where I believe we will see the upside capped. Some support being found at 95.95, as we can see here, and a decent push to the upside. So it looks to be just a small correction, I think, and looking really for this 99.53 level to do a job on the upside. Obviously, time will tell, but for now, I expect it to remain within this bearish channel. Some pretty volatile stuff on sterling still. Obviously, we saw this time last week we were crashing on a number of sterling pairs as a result of the actions from the Bank of England and sorry, not the Bank of England, from the UK government following the mini budget. Then obviously we saw the UK Bank of England step in to drive prices higher and stabilize the markets with some form of quantitative easing, effectively buying long dated gilts. And we continue to see this risk rally move to the upside, and we are seeing some sort of recovery. So we're now above or at basically the prices that we saw just prior to that mini budget that was announced, not last Friday, but the Friday before. So that looks to be very much on the front foot. Overall, of course, the trend remains very bearish. So we are expecting any upside advances to be capped and for the downtrend to still remain the dominant trend for now. So in terms of trying to trade this, I think risk reward is becoming increasingly less and less as a result of this move to the upside. I think eventually we will see some of these rallies capped and for the overall trend to remain bearish. I could go through many more, but because we're up against it time-wise and I'm by myself, I'm just going to focus on some of the main assets really. And if anybody's got any thing that they want me to take a look at, please post it up on the stream live chat. Moving on to Bitcoin. Still remains bearish as far as I'm concerned. We've got a really large head and shoulders top pattern that formed on the daily chart back completing back in May, and since then prices have continued to move lower. We did see some attempt at a correction throughout this period, but then that broke down and we've seen that continue to act as resistance. Prices pretty sideways at the moment, quite choppy, just in front of a 78.6% fib level. So from a risk reward perspective, while in and around this region, and if we expect this 78.6% fib level to continue doing a job, then the risk reward is quite favorable here if you are a long-term buyer. Of course, if we do start to take out these lows that we posted back in June, then that kind of invalidates that picture. And I think you'd probably want to be out of it because the chances are we're going to continue to see the downtrend persist. So do be careful with that. Let's take a quick look at XRP because that seems to be the one that's holding up quite nicely. We seem to have formed some sort of short-term bottom on this, maybe a double bottom. One bottom here, the second one here, broken out to the upside and a nice pullback to retest this newly formed support. So providing prices remain above this blue line, which is at 41.00, then there is potential for higher prices. We do have some pretty significant resistance levels above, and overall it does still remain in a downtrend, but there is some encouraging signs here over the last few weeks. Moving on to the energy markets, let's take a look quickly at natural gas. This formed a really nice head and shoulders top pattern on the daily chart, broken down to the downside, really quite nice respecting of the technical levels there. Prices continue to move lower. We've got some support at 61.8% fib level, which comes in at 585. So looks as though we're going to see continued lower prices on this one in the short term. Similar situation with the oil markets at the moment. Continue to trade within a bearish channel, which basically formed back here in June. And while prices continue to be contained within this, we can expect to see lower prices. It's the same situation on the crude charts as well, although that did find some support at a 78.6% fib level. Really nice turnaround there in the short term, but ultimately expect gains to be capped within this channel for the time being. Taking a look at silver and gold, these two seem to be turning around a little bit, being helped really by that weakness that we've seen in the US dollar, although it still only looks temporary. There could be an argument that we're in the process of forming some sort of bottom here on silver, but it needs to do a fair amount more before we can be convinced of that. If we can take out the highs that we saw in September at 1998, then maybe there will be some higher prices to be seen on silver. Gold really isn't keeping pace, still remains within a bearish channel, as we can see here. Let's just extend that slightly. And we're below this major support here at 1676, and that is now capping any upside advances. If we look at the price action from Friday, we can see we rallied into that quite nicely before then reversing the entire move to form what looks to be a bit of a gravestone doji. Typically they happen at the top of moves, so maybe that would be rather a shooting star than a gravestone doji. But either way you look at it, it doesn't look particularly healthy and suggests that we are going to see lower prices, and that would indicate, of course, that we're going to continue to see dollar strength. Okay, let's move on to the indices now. ASX 200 looks quite interesting on the daily. We've seen the prices fall into a major support level here at 64.03, pretty much tagged it to the pip this morning before then bouncing quite nicely to the upside. Take a look at some of these European indices. The Euro Stoxx 50 is not looking particularly healthy. We've broken down through these major levels here at 33.85 and prices continue to move lower. We are fast approaching a 78.6% fib level at 12.19. Be interesting to see if we get any support form at that level. Markets probably worried a little bit about this story that we're seeing from the two European banks, Credit Suisse and Deutsche Bank. So that is likely to be impacting these markets today. Looking at the CAC 40, that is breaking down through support at 57.55, fast approaching a 61.8% fib level at 55.85. And if we look at the DAX, that's in the red today, down by 0.9%, probably one of the worst performing at the moment in Europe. Broken down through this major support at 12,431 and looks to be heading lower, taking out that 50% fib level. The next major level we've got on the chart here is at 11,328. Looking at the Nasdaq, that broke down through this major support that we've been highlighting for a while now, 11,035. So that's not very encouraging at all. Prices down again this morning on the futures, below that support level. So we'll be looking for a retest of that to see if there is any appetite to try and push the prices above it. If not, then the 61.8% fib level at 10,500 looks a real possibility in the short term there on Nasdaq. Looking at the S&P 500, that also broke down through major support last week. We had a look below it on the 28th of September, but we saw a pretty nasty close on it on Friday. That being a month-end close and a weekend close, which is quite significant, I think. So we're below that level. We are slightly lower today. We've got a 50% fib level in view at 3,500. That should also be quite a large psychological level for the S&P 500 as well. The measured move of this head and shoulders top that we've got actually comes in at 3396. So for me, we may see some buying interest in and around this level here, just below that 50% fib and in front of the measured move of the head and shoulders target. Either way, it still looks pretty bearish overall. It's been a really nasty move to the downside here from that correction that we saw in August. Finally, let's take a look at the FTSE 100 because this really is doing a pretty significant job at this 6822 level. We've had a big look below it this morning on the futures markets, now open obviously on the day, forming what looks to be a bullish hammer candle, having tagged this 6822 level. If we can post green today, then I think that will be pretty significant and would indicate that maybe we're going to see yet another bounce from this level. As you can see, we've had numerous bounces from this level previously, going all the way back to May 2021. So that is likely to encourage some buying interest, I believe. If we see a close below this, which we haven't previously, then that would be a negative sign for me and indicate that we are going to see lower prices towards this 38.2% fib level, which comes in at 65.68. So we've had one request to look at euro sterling, so let's do that quickly. So we saw a big breakout of the resistance level at 87.17 recently. We saw a nice pullback in late September before then this big move to the upside, which was obviously artificially created by the budget and then the stepping in of the Bank of England. We've seen a nice pullback to this level actually of 87.17 and bounced quite nicely. So looking at that from a technical perspective, as Archie on the TradingView stream correctly pointed out, that could be quite a nice buy on the retested support line there. So potential there for an opportunity for trading. If you are going to buy it, then obviously you'd be looking to go in now roughly at market with a stop just below those lows, probably that we posted there on the 22nd of September. And arguably you could target a move back to these highs up here, which would be a 6.87% risk reward ratio on the daily chart there, if that were to play out. But nice reference for the stop there anyway, at 86.83 for me. So could be a nice setup there if anybody's looking at that pair this morning. Okay, so whiz through that as quick as I could. And obviously we'll have the rest of the team back throughout the week. But if we look at the gun to the head trades now, so just to reiterate, this is a bit of fun that we participate in each trading day that we do these videos. We pick a live trade on the stream. Each idea must have a stop and a target. All the ideas are placed at market, and we close these off at 9 p.m. UK time, or when the stops or the targets are reached. Let me just bring up the TradingView profile so we can have a quick look at how the trades went last week. So if anybody wants to check these out, it's very easy to do so. You just go to our TradingView profile, which is signal_center. And we had Jamie buying the Russell 2000. Looked to be some interesting price action, nice bullish divergence on this as well last week, but sadly there was no follow through there and the trade was stopped out. Steve was looking for a stall in the S&P 500. Decent move to the upside early on Friday morning, which Steve was hoping would lead to something a bit more substantial on the upside. Again, didn't happen. We actually saw the S&P break down to new relative lows. And I was buying the Euro Stock 600. Now, this isn't available as a CFD price on TradingView. So trading actually stopped at 4 o'clock on this. And it was ever so slightly offside, ever so slightly onside, 0.1% on that one on Friday. So choppy markets, and obviously that's impacting our trade ideas as well, because it is very challenging at the moment. So got to pick some new trades today, and I think I'm interested really in this FTSE 100 setup. Just looks to be the most obvious for me in terms of the levels that it's currently holding. This is the daily chart. Number of wicks have tested this 68.22 level, and on each time over the previous 5 occasions it's held. So is it going to be another situation like that? Let's have a look at the intraday charts to see if we can spot some opportunity here. Let's just clean this up actually. So this is a major level, 6822. Let's just get this on the chart, 6822, and do the coordinates for it, 6822. So that level is holding on the daily. Seen a nice turnaround now on this. Really positive candle over the last hour. Over the last 19 minutes, in fact. So a long way to go before we can really get excited about that. But I've got a gun to my head. I've got to get a trade on. So I'm going to try and buy the FTSE at 68.47, its current price. Stop loss below the low that we posted overnight, which is at 67.75. And I'm going to target a move up to this region here, just these previous highs that we posted on the 28th around 11 o'clock. And that comes in at 70.30. So looking for just under 2.5 as a risk reward ratio on that. That's my trade of the day, buying the FTSE 100. Okay, so that is that. In terms of the day ahead, on the economic calendar front, we have the US, that should be ISM manufacturing index number. That's due out at 3 o'clock UK time today. And then overnight, or at 4:30 a.m. UK time tomorrow, we've got the Reserve Bank of Australia policy decision. Just to reiterate there, the consensus is for a further rate hike of 50 basis points, taking the overall rate to 2.85%. but it's really the forward guidance that will inevitably be the key element for the Australian dollar overnight. So we'll be keeping an eye out for that. In terms of what's due out the rest of the week, it is quite quiet. We are focusing really on the non-farm payroll number, which is due out on Friday. We also have the Canadian employment number out at the same time on Friday as well. Lots going on in the markets, lots of rumours swirling around. Specifically with regards to these two massive European banks, which are rumoured to be on the brink, which could be catastrophic if true. So do keep an eye out on the latest news and latest headlines that's impacting that. And hopefully that will keep you abreast of all the latest information, as well as, of course, we'll do our best to inform you of what's happening too. So short and sweet today, just under 21 minutes. And hopefully it was useful. As I say, a bit of a whistle-stop tour across most of the assets. But if anybody does want to get involved, please post up on the stream what it is that you're looking at, and I'll do my best to cover that while the rest of the guys are out of the office this week. Have a great day, everybody. Trade safe, and I will see you tomorrow morning. Take care. Goodbye.